Alright, hey everyone, welcome to my channel. So this is my first video, and my entire goal with this is really just to track my own progress and kind of see how my portfolios will evolve over time. It'll help me track and maybe be able to predict how it's going to move forward. So yeah, this is what I'm working with here. I'm running a Google Sheet tracker that I got from Ticker Data. Ticker Data is very cool. They have like these sheets that you can use and kind of track whatever you're looking to track, or whatever you're kind of looking for. They've got valuation models, stock analyzers, but I'm just using this portfolio tracker. I really like this tracker because you can just kind of really see everything in a simple manner. It's all kind of right there in front of you. It's pretty nice. I like it. So this portfolio, this IRA, this is my Roth IRA, and it was just recently opened like a couple weeks ago, because I kind of just reshaped my entire investment strategy over the last couple months, and I've been really trying to study as much as I can and learn as much as I can about this whole entire investment strategy, which is based on dividend growth. So I would consider myself a dividend growth investor, and that's exactly what I want my portfolio to reflect. I know some of these holdings might not make the most sense, but like I said, this is a new portfolio, and I'm 21 years old. I'm new to all of this. So I'm really just trying to better myself in my financial literacy here. But I think I've done a pretty solid job on building this portfolio. And now it's really just going to be over time adding capital to it and seeing how it grows over time. So, but I really wanted to make this channel. I'd like to post these portfolio updates maybe on a monthly basis, where I can go back and reflect on my own progress and maybe make notes of patterns on how the portfolio is changing. So I would really like to, if anybody's I'm sure this kind of content is not going to be very interesting to most people, but I would love to build a community where everybody is on the same consensus of dividend growth investing. I would like to build a community of dividend growth investors who are just here to share your thoughts and what you think about any stocks that are, kind of focused on this strategy here. And, let me know what you guys think of my holdings. And yeah, I'd like to just build a community of friendly people who are all trying to learn, because like I said, I'm new to all this, and I'm just trying to learn and build myself a very strong financial foundation for the future. So I really firmly believe that this is going to be my best way to do this. I'm not saying it's going to be your best way, but this is what makes most sense for me. I have quite a bit of time to let this portfolio grow, so I'm not too concerned on quote-unquote growth stocks. And when it comes to the whole idea of growth stocks versus dividend stocks, I firmly believe that there is a lack of awareness on the fact that these dividend stocks are also growth stocks. Like, if you just look at the history of all of these stocks, yes, like some new companies like Tesla or Carvana, or companies that I do have holdings on that have performed very well that don't pay dividends, and that's awesome. I love capital appreciation. However, I do not want to rely on earning my money from selling my shares. I would like to acquire as many shares as I can and have those shares pay me. I don't want to have to sell. If I have to sell my investments, I don't see the point in that. I don't see the point in selling your investments at all. I want to obtain more and acquire more and not have to rely on selling it, so that in the point of my retirement, I don't have to keep selling my portfolio to live off of it. I will just be living off of the passive income through dividends, and hopefully at that point it will have scaled and grown to a awesome amount to the point where there'd be no need to sell. I don't want to sell. I would like to build a portfolio that will continue to pay for itself, and something that I can pass down to my children if I have children, something I can, keep in my family. And that's my goal with my portfolio. So that's what we're working with here. I've got some pretty good holdings, I think, in here. Some of them I could definitely, some things can get worked on for sure, but I think this is a really good start for me. And as you can see, our dividend rates are not the greatest, but I would consider all these stocks like safe, good stocks. I mean, just look at the years of growth and consecutive years of paying dividends. Consecutive years of paying dividends. We are okay. Meta. So Meta is a growth stock. Obviously, they're not paying dividends right now, but that's another thing. Like, I have these dividend growth stocks, but I also sprinkled in a couple of growth stocks just to mature with the portfolio, to see where they go, so that if these stocks were to perform extraordinarily well in terms of growth, that I wouldn't be missing out on that just because I'm focused on dividend growth. But in terms of dividend growth, I think this portfolio is very sound. S&P Global's got 50 consecutive years of paying dividends and dividend growth. That's awesome. Pepsi, 51 years. Like, that's huge. They're dividend kings. Texas Instruments, we've got 35 years of paying a dividend. All right. Sorry about that, guys. Got a phone call. We're going to cut all that out. But yeah, so back to what I was saying, we've got some holdings that have a very, very strong track record. I'm really proud of some of these holdings I have, and although they might not have the highest yield, what I'm really focused on is dividend growth. And, like I said, this portfolio, although is focused on dividend growth, does have some outliers, which I may change in the future. There was a YouTuber I was watching, I believe Joseph Carlson. He was talking about building his as a compounding machine, and I think what he was going about was filling his portfolio with the strongest dividend growth companies, which I think is really, really cool, really interesting. And I've been watching his portfolio on YouTube just explode over time. It has just completely grown in value. I believe right now he's sitting at a point where it's like he put 500,000 in and it's worth about 800,000, which is just absolutely insane. So, and that's another reason I don't think I think people are false when they say that dividend stocks are not growth stocks, because dividend stocks mature just as regular stocks do. So, but who am I? I don't know anything. Nobody knows anything. So we're all just rolling the dice here. But dividend growth rate, that's what I'm more focused on, and I have a long time horizon. I could let this portfolio build for this Roth IRA I actually am going to let build for 30 years, because I won't be able to withdraw it. I won't be able to withdraw this for 40 years. Oh my goodness. So this one's going to have quite a bit of time to marinate, but I also have a taxable account. In that account, I intend on building up much faster than my Roth, because I would like to retire in my 40s. So I have a 20-year time horizon on my taxable account. And for the Roth IRA, I can't even withdraw it for 40 years, so that's going to have a lot more time to marinate. And that's why I've got some growth stocks in there. If Meta, which I firmly believe will, but if Meta just completely explodes in value, then I'd like that to be in my portfolio where I'm not going to get taxed on it. So I didn't put Meta in my taxable account. My taxable account's more focused on dividend growth, but so is the Roth. It's just got a couple outliers. But dividend growth rate, look at this one, Lowe's, 16.91% of growth in a 5-year period. That is absolutely insane. 5-year and 3-year are damn near 17% each, and that's 61 years of consistently doing that, year over year growing. That is absolutely insane. I love that. Honestly, I believe my portfolio averages out to about an 8% growth rate, which is, I think, solid. I think it's not bad. And like I said, there's work to be done. I could make it better, but for a start, I think that's good. I think an 8% overall is far more than inflation. Although inflation is absolutely insane right now. I think once the economy eventually straightens out, I think inflation will hopefully get back down to the projected 2% that the Fed wants. But, who knows? Who knows what's going to happen here? We got Aflac here, 14%, 13% on the 5-year for 42 years. That's safe, in my opinion. That's safe. And you don't know that that's safe just because it says it has years of growth. Like, you have to go into the company and research their earnings and see if their earnings are growing just as their dividends are, because if the company's not growing their cash flow, then then they cannot sustain that dividend. So you really have to put your research into each and every one of these companies to make sure that they line up with your long-term goals. But I think most of these companies do. For me personally, Procter and Gamble's another awesome company. 6% is a little low on the growth rate, but they have a whopping 6% is not the greatest growth rate for Procter and Gamble, but they have a huge dividend payout yield. Their dividend yield is pretty nice. So Microsoft's another awesome growth. Intuit, great growth. MasterCard, Costco, these are all amazing growth rates, I think, in my opinion. Sherwin-Williams, that's a new holding I just learned about. 46 years of consecutive growth, consecutive payments, consecutive growth at 13% on the 5-year. That's amazing. I think that's amazing. SCHD, come on. We all know SCHD. SCHD is awesome. It's the king. They have an awesome growth, awesome track history. Starbucks is another good one that I like. Home Depot, obviously. But I think Lowe's is going to be one of my favorite holdings here because they have just crushed it. They have absolutely done amazing. Visa's another great growth company, and although the yield is not the best, I'm not in it for yield. I'm in it for growth. I have time. So the yield doesn't concern me as much as the growth does. And that's what I think is really important to consider, because although you start with a low yield, you are compounding this growth. It is just compounding year over year over year. So I think that's really important. But if you go back to this spreadsheet here, you can track, your holdings here. You put in what you have and how much you have. Clearly, I don't have much holdings at all. I have about 29, 30 positions here, but I don't have much capital. As you can see, $2,000 is what I could afford right now. But it will increase over time. I'm sure of it. And this account actually hasn't been paid any dividends yet, but like I said, I just opened it a few weeks ago. However, if we go over here to my taxable account, you can see that I have been paid these dividends, it's really interesting to watch, because you can go to your dividend dashboard here, and it's going to tell you, how much is coming in, how often it's coming in. First, let me cut this real quick. I'll log back in. Oh, there we go. Okay. All right. So this is my taxable account. As you can see, this account's a little bit older, although the value is lower. This account I've built up weekly with weekly deposits, and it started from 0. And I started this account in April. So this is about 7 months of growth. So not much time at all. But I've clearly seen growth on some of my positions. Home Depot, Starbucks, some of these positions have grown. I definitely have some losers. We got Texas Instruments, but this is a new holding. This is a new holding. I'm not concerned about the stock price. I'm not concerned about the loss, because like I said, this is all relatively new, relatively newer holdings. So I'm not worried about what the price is doing right now. I'm going to be worried about the price in 30 years from now, 20 years from now on this account, actually, 20 years, because I am going to retire at my 40s. I'm just saying that right now. But it's very cool. You can track your projected annual dividend income, your portfolio value, your payments over time. But, it's going to be really interesting to watch how this changes over time. I'm very excited. But clearly, you can see how low all of these holdings are, like new holdings. So you can see I've obviously been holding these ones a little bit longer, just based on the position size. But yeah, this is very cool. You can see, everything from your dashboard here. And what I think is really interesting, yeah, obviously you can see the holdings are extraordinarily small compared to these ones. These ones are the ones I've been holding since April, and these ones are all just recently acquired positions. So I think that's important to know. And what I think what is really interesting to me is, like, if I continually deposit into this portfolio, my yearly dividends, right? 15 years, 20 years, right? In 20 years, that's when I want to retire from this account. 20 years, I'll be making an extra $14,000 a year. That's over $1,000 a month. That's gonna pay for my house. That's my house payment right there. And I'll be making that just for owning these companies, just for owning the shares. The portfolio value will be worth $400,000. But this is all in 20 years without reinvesting. If I switch this over to reinvesting in 20 years, I'll be making $22,000 a year. That is just under an extra $2,000 a month on top of my job, on top of my W-2 employee earnings. Like, this is all extra income. In my portfolio value, this is where it's very interesting to see the difference between reinvesting and not reinvesting, because in 20 years, what was $14,000 is now $22,000 extra. That is absurd. In the portfolio value, $572,000 in 20 years, just if I keep doing what I'm doing now, which is, it's not unsustainable. I've been doing it. You know what I'm saying? So I think that this is really interesting, and I personally believe that, with time, this number is going to go up. These numbers are going to go up, because with reinvesting, and then as I grow in my career and I earn more income, I can deposit more into here. And there comes a point where, I'll be making yearly $22,000, or let's go to 15 years, because I want to retire in 20. So on 15 years, there's an extra almost $12,000 going right back into the portfolio that I didn't have to deposit. It's just money that's being reinvested, which I think is just awesome. I think that this is going to be a compound interest machine, like Joseph Carlson would say. However, this is probably not a portfolio anywhere near as good as Joseph Carlson's. This guy is an animal. There's a lot of finance YouTubers that I've been watching lately, and I think this is definitely something that I am extremely interested in. I've been watching this kind of content for, probably over a year now. My favorite YouTuber is probably Gen X Dividend Investor. He is an animal. He's a beast. He's awesome. I like Ryan Williams. He's really cool. Minority Mindset, really, really smart guy. Just these guys. Dividendology, definitely one of my favorites. He's actually the reason I'm on this spreadsheet here. He plugged ticker data in his videos, and that's how I learned about this whole tracking situation. And then Ryan Williams, actually, I watched one of his videos, and he says Snowball Analytics is a pretty good one. So I just recently tried doing this, and it's very cool to see. This is very advanced tracker. This is going to tell you, who's declared dividends, how much you're making, when you're making it. Like, it is very interesting to see all of that. So I do like Snowball Analytics very much. I don't know if I'm going to pay for this monthly, because, that's the last thing I need right now is another subscription. But I do think Snowball Analytics is very cool. They tell you quite a lot of information. You learn a lot about your dividends, how much you're making, how reliable and safe your dividends are. You know what I'm saying? So I think this is a very, very helpful tool. Average annual growth, this is just amazing. Lowe's is definitely going to be one of my favorite holdings. I'm really impressed with them. So yeah, there's a lot of analytics you can check out here, which I still have to learn because I haven't, been on this very much. But you know, this is another cool thing. And this is Seeking Alpha. I really like Seeking Alpha. You can search any ticker you're interested in. Snap-on. Snap-on is a company I just started researching. They got a 2.34% yield, which is pretty cool. But their dividend growth, I've seen 5-year, 10-year. We're looking at Snap-on 5-year, 10-year, 14% on the 5-year, 15% on the 10-year. That's just beautiful. And I firmly believe in Snap-on Incorporated because I am a plumber and I see firsthand how many guys in the field owe so much money to this company here that I think their profits are going to continue to keep rolling in. I think that their business model is pretty strong. Consecutive years of 15 on dividend growth rate. That's beautiful. That's what I love to see. So yeah, I'm not going to dive down on all these stocks, each individual holding. I really just wanted to kind of record where I'm at right now. This is November of 2024, and this is where I'm at right now. My portfolio is worth $1,300 in my taxable and about $2,000 in my retirement IRA. About $2,000 there. So I'm sitting at an okay amount, but really I just wanted to create this as a starting point. This is where I'm getting started. So I think it's going to be really fun to watch how all of this changes over time. And I hope that people are interested in this and want to watch with me, want to watch how this grows, because you can do this too. Anybody can do this. This is not gate-kept information. This is the public stock market. You can buy and hold and do whatever you want to do, or don't. But yeah, so this is my start here, and I just wanted to kind of get my foot in the door here. I've been really putting off making this video because I'm very nervous of putting this kind of information out on the internet. I feel like I'm kind of laying all my stuff out on the line here, and so it's a little bit nerve-wracking, but I do believe, even if nobody watches this content, it's not going to bother me because this is content that I want to watch. I would like to watch how my portfolio changes over time, and I think that it could be pretty cool. And I really would like to build a community of like-minded people who are, kind of in the same boat with me, so we can kind of grow our portfolios together, and we can discuss, and I can learn and they can learn, and we can, increase our knowledge together as a community. So I think that would be really fun, really cool thing to do. So yeah, this is my portfolio. This is my standing. It's November 2024. I guess I'll update you guys in December and let you know what's changed, how things are going. So, alright guys, it's been real. Hey guys, so last minute, I just wanted to plug this in here at the end of the video. Please consider subscribing, sharing this video with people people you want, kind of looking out for their own future, because I think that if I can build a community of people who are all interested in this, I think that it will only better everybody's situation. And not because I want you to watch my content, it's more because I want everybody to be successful. I want everybody to have a happy future where they feel financially stable, financially free, financially independent, and that's my goal. And if anybody else shares these same goals and values, then please let's talk. Come in the comments, leave me a comment what you think. Maybe share this video with people you want to build a future with, or maybe some family members who are interested in this kind of stuff, anything. But I just wanted to say, consider hitting that subscribe button. Thank you guys for watching this. If anybody does watch this, I really do appreciate it. But yeah, thank you guys. All right, bye.